Good evening, my friends, investor in equity markets. Myself, Gautam Gangopadhyay, again today has come back to speak some words and lines of the stock markets. Now, as I have been speaking regarding the stock markets last almost 1.5 years to 2 years. Now, most of the time I have spoken the stock, spoken about the buyback, spoken about the right issues, bonus, etc., as well as delisting, I think, as well as the fundamental techniques and how to choose the multi-bagger company, and as well as certain stock I recommended myself, and most of the stock I already has given the much return. Now you will watch many times people they are placing the video telling you the balance sheet, telling you the profit loss account, telling you the like growth, but they do not say you the stock name. And hardly you will find they spell the stock name somewhere at the toward the end or into the middle. Even you do not understand because they want view. Now, myself category is different. I want to spread the stock educations, not the view, not my earning from the YouTubes and all, because earning it there I will welcome, no problem. But I am not dependent on the earning from the YouTube. Now, listen, I have already spoken regarding the portfolio. Today, I will speak of equilibrium within the portfolio. That you have to understand. My techniques, what I induce between my friends and the investors, and especially for the new investor, the inducement of my idea, how I am earning from the markets, how I am developing my strategy into the market. Because you cannot say anybody who has come into the market without a motive to earning. Everybody is spending time, everybody is spending money, everybody brainstorming, everybody is trying to, according to their capacity, they want to read the market, they want to read a particular stock or a group of stock or an industry. And somebody is like a juari. They are playing features, options, and apart from stock, they do many things like currencies. Now, my motivational video and my speaking or say, I tell you the story of the stock market, how I have learned, and I always say, my friends, read the financial. If you are not the financial backgrounds, then also while I am speaking how to choose of the multi-bagger company, financial result, you can do certain interpretations. And today, if you have seen my like development of portfolio and the master portfolios and my portfolios, different stock, like some stock I have taken, considered, and how they fluctuate, then what strategy should you have into your mind, that you have understood and listen properly. Today you will be able to understand the equilibrium within the portfolio. That is the portfolio I split into the sectional, and then the equilibrium I will define. The what idea I am putting into my stock portfolio that I want to introduce so that people better they can like exchange idea and learn more. My idea is not that you are blindly putting your hard-earned money. My idea is not that. I put my hard-earned money into the market only after reading. I said many times the stock name. Today I'm not giving you the stock name. Tomorrow or day after tomorrow I'll come back and will say you only one stock which can give you the multi-return, and the stock I'll state is the MNC. Today let us start to talk about the equilibrium within the portfolio. Let's see. Sorry. I am talking about the only equity portfolio. Here I always pay side like ABC Limited. You have ABD Limited. You have ABE Limited, you have ABF Limited, you have, and say 5 you have the BC Limited there. For simplicity, okay, I take one more 6. Say EF Limited is there, EFG Limited is there. Now you have been invested here initially 5,000 for simplicity, 5,000. Here also 5,000 for 5,000. 5,000. You started with this on say 1st January of any accounting year. That is calendar year I am assuming only. Now in the June 1st January. Now in June you found this is 8,000. This is like 7,000. This is like 3,000. This is like 2,000. This is like 12,000. This is like 5,500. Or simplicity 6,007. Now what is equilibrium? For simplicity, say 6,000. Now total investment is your 30,000, and by June you have a portfolio 8 and 15, 15, 5, this together 5, 20, 20, 30, 32, 38,000. So you have say this becomes 7,000. So it become like quite okay. 7,000. So it become like 39,000. Equity portfolio, I am talking regarding the equilibrium. Equilibrium. This is my own research. You never heard any expert or anybody from the market is speaking regarding the equilibrium within your portfolio. That I am sure. And might be, if it is the right, if it is accepted by the different expert, it might be in coming days or coming months or years, you will find people talking regarding the equilibrium within equity portfolio. Now it might be the case of portfolio of mutual fund portfolio, might be the case of other portfolios also. Now this is on the 30th June. Now by 31st December, I have to get the base return. Try to understand, I have to get the base return. Now what should we think about all this company? Is the company is pharmaceutical? This company is pharmaceutical, for example. Now, if this company are pharmaceutical, these two companies are motor parts related, and rest of the company For simplicity, I am taking only 3. It could be between the mainies, because if you consider my portfolio, there are 30 stocks. So those stocks, it might be that only a single stock belongs to a single industry, and sometimes I am finding like 5, 6 or 7 stock are belongs to the pharmaceutical, or 2 or 3 or 5 maybe belongs to the IT. So I will consider group them. So in portfolio you have a group also, like you have a 3, 4, 5 groups of industry, or within group again we can split subgroup, like those company having similar type of capital, similar type of debt in their books, similar type of earning capacity in their books, considering the equity with earning, that also you have to consider. Little bit very technicals, I mean to say fundamentals. Friends, fundamental reading is difficult. Technicals, I'll give one example today before ending. It's very much easy. Like when the stock is going up or going down, if you understand, then you can walk according to that. But fundamental means funda is required. Stock market funda is required. You should not lose of your capital. That I am sure. So my idea is to get the 31st December the best return. I have categorized these two as pharmaceutical. These two as motor parts or the motor company. These two as IT company. For simplicity. Now I have to pharmaceutical. I have to understand which stock has done what. Now this stock has moved faster from 5,000 to 12,000. This is also pharma company 5,000. Both has moved positively. This has given the 60% return. This has given more than 100% return. Now, if these two companies having the similar capital structures, you have to understand, comparing with their earning, then simply we can distribute this fund and this fund. We must bring equilibrium, at least minus 2,000, at least, and plus 2,000 will be doing. So it becomes 10,000 cost now on 38 June. So there will be parity here also 10,000 on the 30th June. So comparing these two has given me 100% return. So if there is a fluctuation of return on the 31st December by whatever means, then I must get the maximizing profits without any speculations or without any taking the risks, because these two companies, if having similar structure, understand my words, similar earning capacity, similar thing, that is, this has moved also, this has moved, but this has moved the first. So in the coming days, for me, I deduct 4,000 from there. I'll put 8,000 over there. Here I'll add 4,000. I'll put here 12,000. So this 20,000 I'll split up similar way. Because in the coming days, I can see this is coming with this with in equilibrium. This might move, this also might move, but movement of here should be slower, because if I run like fast, it is a long run, like 10 kilometers, then towards the end I do not have that energy. But here if I run slower, towards the end I have the more energy. That to be understood. Equilibrium, if you have a science background, you have already know the equilibrium in a chemical reactions. AB, two different chemicals are producing CD. Then the reactions. When you started with the AB, CD will be produced. But production of CD become more, then they are again reproducing AB. So forward reaction, backward reaction. At certain juncture, you will find this has neutralized. That means AB has converted into CD, CD also being converted into AB. At certain juncture, you will find AB and CD, they are doing the same reactions, producing CD, producing AB, AB producing CD, but it is in the similar rate. So that equilibriums I have spelled out. Now, remaining you have to do accordingly. In case of depreciations, you have to understand whether they should be in your portfolio or not. If it should be in your portfolio, then accordingly you can do something, some mechanical idea and put little bit more fun out of the profits. But that profit should not be exhausted. An idea of like negative return, here also positive return, both cases. Positive return. Now these two model company, one is positive return and one is negative return. If you understand this cannot grow much, you can simply book the losses, put the whole fund over there, because here 40% return is there. That is again something. But today I mainly want to speak to you the equilibrium between the portfolio when portfolio is working, because both are working. Okay friends, good night. This is the new idea I have spoken. I want to educate the new investors especially, and like they should brainstorm. And obviously what I am speaking, it is in terms of balance sheet, in terms of profit loss account, in terms of quarter to quarter result. It's not the simply the technicals, just a spell you know in 2 lines. जहां पे स्टॉक आपका ऐसे जा रहा है, you have to understand this is the here movement, after movement started or you entered here, started, this is the lower and again up and then lower. So this lower is high. If it is exceeding like 10%, or say at least 5%, 5 to 10%, then you can continue with the stock. Again it is 5 to 10%, continue with the stock again. Now whenever this lower, here this lower has exceeded both of the lower, then you have to understand, you have to exceed 100%, because if you show like this or like this. I will not speak much about the technical thing. Many technicals are easy. Fundamentals are very strong. Mental equilibrium is required. Okay friends, lastly good night. Next time I am coming out with a multi-value stock where you can put your money MNC. I'll speak of the industry, speak of the stock, the better capital very less, sales are, turnover ratios are much more, had a profit because stock is running at a cheaper price. Good night friends.